We have a great, wonderful, diverse crowd here, and again, thank you all for being here. It's great to see so many different kinds of people, so many different ages of people. We have young and old people. Is there anybody here who remembers the year 2008?
Yeah.
We had a presidential election. It might ring a bell. Do you remember a guy, he ran for president, you might have heard of him. His name was Barack Obama. You remember him?
Yeah.
He ran for president in 2008. You might remember how he did. You might also remember one of his premier campaign promises. Republicans went up and down the country. They said the Democrats will raise your taxes. Barack Obama said, if your family makes under $250,000, you will not see your taxes go up a single dime. Not one dime, he said. Your taxes will not go up. Not one dime if you make under $250,000 a year family income. Anybody believe that? 6 months from today, on January 1st, 2011, most of our taxes are going up.
Yep.
This information is from Americans for Tax Reform. You can find this on their website. It's going up in 3 waves, all on the same day. First, the Bush tax cuts of 2001 and 2003 are going to be allowed to expire on that date. Personal income tax rates will rise. The top income tax rate will rise from 35 to 39.6%. That's also the rate at which 2/3 of small businesses are taxed. The lowest rate will rise from 10 to 15%. That's a 50% increase in tax rates for the lowest bracket of taxpayers. All the rates in between will also rise. Itemized deductions and personal exemptions will again phase out, which has the same mathematical effect as higher marginal tax rates. Higher taxes on marriage and family. The marriage penalty, that's narrower tax brackets for married couples, will return from the first dollar of income. The child tax credit will be cut in half from $1,000 to $500 per child. The standard deduction will no longer be doubled for married couples relative to the single level. The dependent care and adoption tax credits will be cut. This year, there is no death tax for those dying on or after January 1st, 2011. There is a 55% top death tax rate on estates over $1 million. So if you're rich and you're ill, you might want to not execute that power of attorney for your relatives to make healthcare decisions for you, because they'll have a monetary incentive to kill you sooner. Capital gains tax will rise from 15% this year to 20% in 2011. The dividends tax rate will rise from 15% this year to 39.6% in 2011. These rates will rise another 3.8% in 2013. That's just the first wave. The second wave, over 20 new or higher taxes in the Obamacare healthcare reform. Several will first go into effect on January 1st, 2011. They include the medicine cabinet tax. Thanks to Obamacare, Americans will no longer be able to use health savings account, flexible spending account, or health saving accounts out of non-taxable pre-tax income. The special needs kids tax. This provision of Obamacare imposes a cap on flexible spending accounts of $2,500. Currently, there is no federal government limit. There's one group of FSA owners for whom this new cap will be particularly cruel and onerous: the parents of special needs children. There are thousands of families with special needs children in the United States, and many of them use FSAs to pay for special needs education. Tuition rates at one leading school that teaches special needs children in Washington, D.C. can easily exceed $14,000 per year. Under tax rules, FSA dollars can be used to pay for this type of special needs education for another 6 months. The HSA withdrawal tax hike. This provision of Obamacare increases the additional tax on non-medical early withdrawals from an HSA from 10 to 20%. Disadvantaging them relative to IRAs and other tax-advantaged accounts, which remain at 10%. Then there's the third wave of tax increases, the alternative minimum tax and employer tax hikes. The AMT will ensnare over 28 million families. That's up from 4 million last year. According to the left-leaning Tax Policy Center, Congress' failure to index the AMT will lead to an explosion of AMT tax-paying families, rising from 4 million last year to 28.5 million. These families will have to calculate their tax burdens twice and pay taxes at the higher level. The AMT was created in 1969 to ensnare a handful of taxpayers. Small businesses expensing will be slashed and 50% of expensing will disappear. Taxes will be raised on all types of businesses. Literally scores of tax hikes on businesses will take place. The biggest is the loss of the research and experimentation tax credit, but there are many, many others. Combining high marginal tax rates with the loss of this tax relief will cost many jobs. Tax benefits for education and teaching are reduced. The deduction for tuition and fees will not be available. Tax credits for education will be limited. Teachers will no longer be able to deduct classroom expenses. Coverdell education savings accounts will be cut. Employer-provided educational assistance is curtailed. The student loan interest deduction will be disallowed for hundreds of thousands of families. And charitable contributions from IRAs will no longer be allowed. Under current law, a retired person with an IRA can contribute up to $100,000 per year annually to a charity from their IRA. This contribution also counts toward an annual required minimum distribution. This ability will no longer be there. How many of us believed Barack Obama when he said, no tax hikes? Those three. Anybody else?
It's in 2 batteries. It lasts for another hour.